All right, guys, this is episode 1 of taking you guys to a profitable trader. Hopefully, by the end of all these videos, you are going to be profitable swing trading and you can stop doing all that fake day trading that does not work. So, today we're going to be talking about candlesticks, trends, and then maybe a little bit of market awareness. All three of these things are important. This is more of a beginner-friendly video, so if you guys are a little bit more advanced, you can probably skip ahead to later videos. But assuming you guys are a complete beginner, starting from scratch, this is exactly how stocks work, and this is how you're going to become profitable. All right, let's get into it. So first off, we have to start with understanding what do all of these candlesticks mean. Right? As a beginner, it can be a little confusing. They're just going up, down, up, down. What does that mean? So there's two types of candlesticks, a red candlestick and a green candlestick. So for the green candlestick, the bottom of the candlestick, the not like the very bottom, not like this bottom, but the bottom, which like right here, that's called the open. So on these candlesticks, this is the open, this is the close. So green candlesticks, the bottom of not the very bottom, but the bottom of like the rectangle, that's when the candlestick opens, and then the top is when the candlestick closes. Not like the wick, but the top. So that's when that closes. And the wick represents how price moved throughout the day. So this is the daily chart. So since the wick came down this far, that's showing you that price went up, or the price went down, came back up, and in this case right here, closed near the open. So for more context, like a bar like this is okay, well, it's not a green candlestick. Let's find one right here. So this bar right here, guys, as you see, it opens and closes relatively the same, but it went up throughout the day. Right here, it went up throughout the day. So what does that tell you? From a buyer's and seller's perspective, that tells you that buyers took the stock up and got exhausted. Sellers then came back in and brought that stock down near the open. So like what that means, and as you can see, followed by it are 3 red days. Sellers won that day. Sellers came back down and put that stock back down, meaning the following candles after that are probably bearish because buyers got exhausted. So there's probably going to be more room for sellers to come in and keep pushing that stock down. All right, for red candles, let's see if can I fix my cursor? I wish, alright, we're about to, fucking hell. Where's the settings? Am I cooked? I want these, like, fucking dotted lines to go away. Where the fuck are the chart settings? What the fuck? Bro. Chart settings right here. Okay, there we go. All right, so for red candles, guys. So the red candles are the complete opposite. So just flip it around. The top of the red candle right here This is called the open. So red candles, top of the red candle, that's the open. The bottom of the red candle, again, not the wick, that's the close. And then obviously the wick is the same. So right here, it opens right here. Price gets pushed up throughout the day and then comes back down, closes near the open, but obviously lower than the open. So green candles typically, I think always actually, they will, green candles, they close higher than the open, and then obviously red candles close lower than the open. So that's candlesticks for you. Pretty simple. The main takeaway from that is obviously knowing knowing the open and the close, but also the fact that what that wick represents. So again, if the price opens right here, pushes up, and then comes back down, what does that tell you? That tells you that sellers are more prominent than buyers, right? And same thing, if the stock opens right here, comes down to here, then comes back up, what does that tell you? That tells you that buyers came back in, the stock's showing support, and that the stock's showing strength. All right, now we'll get into trend. So swing trading, the trend matters, okay? Anybody tells you it doesn't, fucking lying. No strategy works 365 days out of the year. There's going to be times whenever the strategy doesn't work. Specifically like this. If the S&P or the IWM or the MDY are in a downtrend, your strategy is not going to work. You can't trade breakouts in these market periods because stocks aren't following through. So your breakouts are not going to follow through, which we'll get into later. An easy way to know when this is happening is when this orange line, the 10 EMA, goes below the red line, the 20 EMA. That's a sign that you should stop trading and should just sit on cash. Because sitting on cash is actually going to save you money. Believe it or not, if you're trading in these downtrends, you're just going to lose money. It's not going to work. Vice versa, when the orange EMA, the 10 EMA is above the 20 EMA, which is 20 is the red, orange is the 10. This is when breakouts work, and this is when you should be buying stocks, and this is how you're going to get big gains. So as you guys can see, we've been in quite a good run so far. Nice little bull market, and SPY's sitting at all-time highs, was at all-time highs earlier today. And yeah, so these are when stocks work, and as you guys can see, here are a couple of my trades currently. I took NVIDIA this day. I took Meta this day, and this day. I took Uber this day, and I took AMD this day. So, actually this day and this day, 2 times. But you need the trend to be on your side. When the trend is not on your side, breakouts are not going to work. You're going to lose money, and that's just how that's going to happen. The only real way to know, like typically you'll get signs of a bottom. When stocks start setting up, when there's a bunch of setups, that's how you're going to figure out when it's a good time to buy. Because there's going to be a ton of setups, and then, of course, when you get those tons of setups and they start breaking out, that puts the S&P or whatever into an uptrend. So that's how that works. Stocks. So individual stocks, you are only going to be trading stocks, again, in an uptrend. You do not want to be trading a downtrending stock, because probability is against you. If I'm trading plug and it just keeps going lower, why would I try to hit this move right here whenever I could trade NVIDIA that keeps going up? Like, it just makes more sense to trade with the trend, right? Or something like Uber. It just keeps going up. So the chances of my stock continuing to go up, because it's in an uptrend, are much higher. A stock that's going down and then trying to catch the up move, it just makes no sense, and you're not going to make big profits that way. So we've covered trends, we've covered candlesticks, we've covered stock trends. You're only going to be trading stocks that are in an uptrend. I think that is really it for episode 1. Pretty basic stuff. We're going to get into more in-depth stuff in the later videos. So if you like this video, please like it, share it with a friend. This series will take you to a profitable trader if you put in the time, if you put in the work. As we progress through these videos, they're going to get more advanced and you'll like really get a grasp of what I'm talking about. But I'm just kind of trying to ease you guys into these. If you stay till the end of this video, it's a really good sign for you. That means you're probably committed to swing trading and you're a committed trader. I'm telling you guys, if you stick to this, you can make millions in the market. There's nothing stopping you. I love you guys all. Like this video and have a good day.